Fast Market. I'm Alex Coffey alongside Kevin Hinks. Now time for our cash tag segment. So we showcase another earnings company, and this time we're looking at Kroger. Joining us here in studio is TD Ameritrade Network contributor Jenny Horn, and from LikeFolio.com, the co-founder Landon Swan. Jenny, Kroger is very interesting to me because this in many ways is the pure play in the grocery space. So if you're looking to get some of that consumer staple exposure, Kroger may be on a short list of names that you feel like you're truly getting grocery store exposure to.
Yes, because I sort of have a hard time making the comparison from Kroger to a Walmart or an Amazon because, like you mentioned, it's not really truly that pure play. I think maybe more to an Albertsons, but we don't have those around here, so I'm not as familiar with Albertsons, and neither with Kroger, but we do have Mariano's, which is one of their brands. So they really have a solid history of topping earnings estimates, especially in their last 2 quarters. But what we are seeing with grocery chains across the board is sort of this slowdown. If their earnings actually came in line with analysts' expectations this quarter, it would mark a 12% reduction in profits year over year. And earnings growth has really continuously decelerated since 2020, with digital sales slowing last quarter to a whopping 16%, and their overall sales declining about 0.5%. So management has also expressed, sort of following their first quarter report, that their same-store sales are expected to fall as much as 4% for the full year. So we are seeing levels lower than 2020 with sort of the stockpiling trend that we saw in the last year. Now that has sort of, diminished, but nonetheless, they are still expected to report a profit and growth year over year. So they were founded back, I thought this was important to know, they were founded back in 1838. So this is no new company, and it's one of the largest grocery chains in the country with more than 20 brands, and it operates in over 2,800 locations in 35 states. So its scale is definitely worth noting, and its age is also definitely worth noting. Now, I mentioned, of course, we don't have Kroger's here in Chicagoland, but we do have Mariano's, which are very elite grocery stores. And Alex and I did say that it's difficult to make the comparison to a Walmart or Amazon, but one thing Kroger does have going for it is that it actually is outperforming both companies by a significant margin in 2021, and somehow has sort of done so despite the fact that we've seen some of these commodity prices higher. We've seen chicken prices go up and beef prices affected, and somehow Kroger has fared a little bit better than some of its peers. But when you talk these names, what really separates them all from the consumer standpoint, I believe, is actually their last mile delivery, which is a conversation we have so often on this show. And that brings me to our first tweet of the day, which sort of talks about delivery with these names, which says, "The debate still rages whether delivery, grocery or otherwise, will ever be a profitable business model, but from the customer perspective, it is 100% what they want." And they go on to actually mention Albertsons and DoorDash and Amazon and Kroger. And I thought this transitioned very nicely into our next tweet, which also talks about sort of this last mile delivery, which said, "I just realized how quarantine life has affected the things that I look forward to doing on a daily basis. Today I told my wife we've got a Kroger online order to pick up tonight. Yes, wow, how things have changed." And they said hashtag anything to get out. So I thought this was funny. I just searched actually Kroger and online orders, and Landon, I got such positive feedback from people on Twitter today. And I have to say that people are, generally speaking, I believe, pretty picky when it comes to their online ordering. And I think they usually tend to tweet when something goes wrong. But I really saw the fact that Kroger seemed to have such positive reviews, and sort of this last mile delivery, I think, has been interesting for a traditional grocery store to sort of expand and keep up with, say, these massive companies like a Target, like a Walmart.
Yeah, you're right. And, Kroger's got a fairly positive rating with LikeFolio consumer happiness, about 60%, doing better than Walmart, not as good as Target, not as good as Costco. But I think you're right. People love the fact that they can get groceries delivered now. That is one great thing that came out of the pandemic. Also, the pickup is really cool too. You can go park and somebody puts it in your trunk. Very handy. So I think that what's interesting about this upcoming report is what are analyst expectations, because I think everybody knows, just like you talked about, there's a little bit of a decline. Our data shows it. I think everybody's kind of expecting that. but where are the investors' eyes going? I think that they're going on to the digital. How is Kroger faring when it comes to digital, that is either delivery or pickup? You can see here on this chart, I mean, obviously this is another one of those charts that COVID just kind of completely screws up. You got people talking about hoarding and this is sold out and going and stocking up back when the pandemic started. But if you kind of take that out, you can kind of see where people are expecting a little bit of a decline in sales based off of the LikeFolio data here. It makes sense. We picked the mentions count metric for this show because it's got a decent correlation of 0.44 to revenue. So not amazing. We're not predicting exactly how much revenue they're going to come in, but we can see the trends fairly well. But again, it all comes down to how are they doing with delivery? How are they doing with pickup? And what we're seeing is that they've taken a little bit of the pie. I think the pie is growing when it comes to digital. We saw them eating up like 1.5 points of that pie, and you can kind of see where they're at right now. They're very small. If you look at Walmart, Amazon, they take up almost the whole thing. You got Target in there, and then Kroger's at 7.2%. This is people talking on social media about these different brands getting groceries delivered by them. So Kroger's doing okay at this. What's interesting is when you don't look at delivery and you actually look at pickup, they're doing much, much better. So people are actually using Kroger's pickup at an increasing rate far more than they're looking at, or than they're using the delivery aspect of Kroger, which to me, I'd rather have somebody deliver it, but whatever, I get both. They're very attractive. So interesting to see what expectations are. The stock's been on an uptrend like crazy since March, and it really just started stalling out around 47, 48. Stock's at 46 now. So I'd say you could say it's pretty high. Expectations are high despite the expected decline in revenue, but that's Wall Street for you. And so you got to figure out what are investors actually expecting from this, and what are they looking at? I think it's all about that digital, because I think that is where investors believe the future of this industry is going, and they want to know how's Kroger doing in that.
This stock, by definition, and you look at the name, is not very sexy. But you know what is sexy? Of Berkshire Hathaway's 25 stocks that they have positions in, this was the second most profitable name. So there's nothing more sexy than profits, Landon. And, Jenny mentioned that same-store sales are going to be actually lower. But if you stack, which is the new thing now because of the pandemic, you stack 2 years of same-store sales on 2020 and 2021, it's actually the 2-year number is up 14.9%. And for a legacy company like this, that's gigantic in terms of same-store sales going up. So, and Jenny asking about how do they get delivery paid for? By selling advertising on the app, Jen, is how they're going to pay for the delivery. But Landon, has this stock run too far? Your mentions count is one of those divergence maps that we love to see. It's when LikeFolio is their strongest contributor to the show, when you have a difference in what the stock is doing. But are these numbers that they're putting out in advertising good enough to outweigh what you're seeing in terms of this drop-off, Landon?
Right. That's the huge question, is what are people expecting? I mean, if you just look at the data and you kind of have blinders on to what the stock has been doing or what expectations are, then we're fairly bearish on it. We've got a negative 51 score on the earnings report. Obviously, that's pretty bearish. The stock is very high. So you got to think expectations are probably pretty high. So that combination tells me that, going bearish on this might be a smart play. But again, I don't know that it's necessarily sales that they're after. They want to know how are they doing on, is my guess, they want to know how they're doing on digital and delivery. And what's interesting is, even though Kroger has done very well on pickup versus delivery, if you look at grocery delivery overall, it's up 70% versus 2019. But that's an easy win against 2019. When you look at it versus 2020, overall, not Kroger, overall, it's down 42%. But Kroger's is only down 25%. So they actually held on to more new delivery customers than companies like Walmart or Amazon. So people are having a very good experience with this, just like Jenny talked about. So they're able to have that stickiness and stick around. And the consumer happiness is good, not great. So long term, I think this is a great company. I think they may have trouble on this particular report, depending on how they meet those expectations on digital.
Landon, talk to me a little bit about that long-term perspective, because I think the digital is clearly a huge part of that, but typically an investment into a company within this space, and you can say consumer staples as a whole, but this is in many ways even more of a staple than a company like Walmart, given its product mix, as it's primarily in the grocery space. You know, you typically would make an investment like this in some sort of a desire for stability or even income to some extent around dividend. It's not always around growth. So this pandemic situation almost kind of gave them a growth driver that is completely uncharacteristic for the space, and it made it very exciting. The question now is this is priced in to the stock, as we've seen the stock appreciate. For it to continue down this path, it has to now have seen consumer behavior shifts. There has to actually have been, you know, those who maybe weren't buying groceries on a weekly basis or buying a lot of groceries now have to have kept that new behavior. Is that happening? Because in our conversations before, Landon, you've said that we've kind of reverted to how we were before.
Yeah, a lot of it has reverted, absolutely, especially when it comes to delivery. I thought that would be extremely sticky. Getting groceries delivered is really cool. I'm not the primary grocery shopper in my family, so I don't know that, you know, how much of a headache it can be. But I think that, you know, going in there and actually being able to pick things out, especially when it comes to like produce or meat, you're looking for freshness, you're trying to pick something out that works for you. It's not a box item. Then I think that could be a big factor in why people don't want the delivery as much as they used to and why it isn't as sticky as we'd hoped. However, again, Kroger has outperformed in the stickiness of delivery, and they've definitely outperformed when it comes to pickup. So that's very strong. And then if you want to talk about being safe, I get it. Completely agree with that. This is a grocery store. It's not very exciting. But, you know, if you also, if you like to invest and get some growth, you go back to that pie chart, they are tiny, right? Mm-hmm. When you look at who they're competing against, Walmart, Target, you know, Jenny mentioned you guys don't have them up there. They're not down here in South Florida. I mean, they're all over, they're not all over the country, and they have a lot of potential to expand. And if they can produce very happy customers, which right now they're doing an okay job at, they need to improve. But there is a huge pie there that is growing that they can continue to take a larger piece of. So even if they just hold at this percentage, this 7.2%, the pie will grow and their revenues will go up. But if they can actually grab more, which we saw that they did, our data says that they took about a 1.5 percentage points off of this chart. If they can continue to grow that share while the pie grows, then they've got a lot of upside potential, especially when you talk about locations, because they are, you know, relatively small compared to who they're competing against.
Yeah, and I think that's a really good point, because I think that Walmart has something of like 12,000 locations across the United States, and Kroger only has less than 3,000. So it is important to keep in mind that scale. But I sort of have a question to challenge your bearish stance, because I understand the stock is, you know, right around these all-time highs. But last quarter, we did see some decelerating growth. We saw year-over-year decline in their earnings, yet the stock went up 4%. So I think actually there could be some negative expectations around this report, because, you know, obviously we're expecting year-over-year decline again. So is it possible that given this pullback this week, the stock has been down about 1% so far this week, that this is actually a better opportunity because the stock is down?
Yeah, absolutely. I'd much rather take a bearish position at 48 than, you know, 46 or 45. And what's interesting, you know, last quarter we had a negative earnings score on them. I think we were at negative 26, and the numbers were bad. Everything seemed like we were going to make money on the trade, and then they went up a little bit. Sometimes that happens, and you know, you get the revenue right, but you were wrong about investor expectations. And I honestly think that is the most tricky thing, the most difficult thing with investing, is knowing what investors care about. You know, we have a lot of hedge fund clients, and we talk to them and try to get a feel for what their expectations are. I don't have any fantastic insights into what expectations are for Kroger other than eyes on digital, which is very important. So I think that they've done well there. I think their revenue is likely to decline, but that's expected. So it's really going to come down to what the perception is on digital and how well they've executed there, because I think a lot of the institutional investors are putting a ton of stock, no pun intended, into how well they've done on digital. And again, I think they're doing well and they have room for upside. So negative 51 score, but that is sort of that kind of looks at the overall picture in a, I don't want to say dumb way, but it's an algorithm that looks at all the metrics, happiness, mentions, purchase intent, everything like that. And it doesn't say, well, what about digital? And is this what investors are caring about? So I can completely understand why, anyone would challenge a bearish case here. We've done well with the data so far, but I do think that with a pullback, it is likely, or it is possible, I should say, that digital could pull them through this with a positive earnings report.
I think it's a really good point, Landon. Thanks as always for joining us, the co-founder of LikeFolio.com. Kev,